Good morning, and thank you for joining Armanino McKenna this morning for today's webinar, Make Your Stock Plan Audit Ready. I'm Mary Tressel, and I'd like to walk you through using your webinar pane. So first, you'll see the webinar pane in front of you. Please note that the orange arrow will allow you to minimize or maximize the pane. If it is minimized, simply click on the orange arrow to bring it back. Please take a second now to locate your question box. Make sure it is visible throughout the webinar because you'll need it to participate for CPE credit today. Also, we want to give you the best advice for using your audio settings. If you're using your telephone to listen in on our webinar, please make sure you select Use Telephone. If you are listening through your computer speakers, please select Use Mic and Speakers. If you have the incorrect settings selected, it will produce an echo sound. To qualify for California CPE, you must make sure that you meet all of these requirements, but particularly, please make sure you're logged into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar, and actively respond to at least 75% of the polling questions and submit the announced codes throughout the webinar. And now I'm pleased to present to you our speakers today. The first is Scott Schimberg, a senior manager here at Armanino McKenna. Scott has worked in private and public companies, and while working for Tria Beauty before joining us back here at Armanino McKenna, Scott learned firsthand how to address a company's stock compensation audit readiness by managing the initial audit for the company all the way through the filing of an S-1. Scott Schwartz is a senior consultant here at Armanino McKenna, and he serves clients within our CFO advisory practice. He has conducted numerous stock and acquisition-related valuations and worked with our entire portfolio of equity compensation outsourcing clients. Finally, we have Michael Guerra, Senior Vice President of Strategic Partnerships for Equity Administration Solutions, our partner in this presentation. And Michael has specialized in working with top executives of growth companies to coordinate stock option exercise, tax strategies, and other estate planning solutions. So with that, I'd like to present to you our learning objectives for today. We are going to, for private companies, make sure that we help you recognize many of the risks and penalties involved in stock option accounting, utilize an audit readiness checklist, and identify the pitfalls of managing employee stock option plans by spreadsheet. We also have the overview here for you, and I'm going to turn the presentation over to Scott Schimberg. Thanks, Scott.
Well, good morning. Thank you, Mary. Just to get started, talking about stock option administration and just the overview of the plan. And really what happens is stock option really goes across the entire organization. It's used as a motivation tool to compensate employees. It's really having an impact on the financial statements because there's expenses that are being put in. It also has a big impact on the financial statements. It's one of the largest sections of the footnotes that are disclosed in the financial statements, as long as having some impact in the other sections like the taxes with the DTAs and those types of calculations. And then it takes some coordination between departments. There's the interaction between human resources of getting offer letters out and getting the compliance with the accounting end of it, and then even the tax end of it. So it takes that level of coordination. So it's really important to have good processes and procedures. And just a big call out. This is a compliance type factor or a compliance type activity that needs to be done by companies. And so there's really no reward for doing it right. But there's some big penalties for doing it wrong. And then what we find a lot of our clients looking for is balancing a low-cost solution versus risk management. So, do they have the right systems, right processes, and right procedures in place to really make that work for them? And then we have two just to kick off our discussion, two case studies about some of the risks that come out. And the first one is about a company that, in a lot of companies' offer letters, they put the how many options that they will present to the board to get granted. They put that in the offer letter, and that usually comes up at the next board meeting, and the board meetings are in a lot of cases at a quarterly basis. And so if procedures aren't put in place correctly, it's pretty easy to miss what those get those grants presented to the board. And in fact, in one case with the client, they didn't have that put in place. They never presented it to the board for approval, and when the employee left about 2 years later, or about